Today we are talking about the VA loan pros and cons. I'm a real estate agent. Sean is a lender. We work together quite a bit, and let's jump into it. So, pro number one is no down payment options.
Yeah, 100% financing. So a veteran can choose not to put any money down. Now, they do have closing expenses. That's always a misconception. No down payment doesn't mean that the veteran's not responsible for closing expense, but that's kind of where you come in, and if you get seller credits, then they can cover closing expenses, therefore zero cash to close.
Yeah, so in some cases it could be just completely zero down, essentially, if you get the seller to cover a credit towards your closing costs. But you're also you can put money down if you want a lower monthly payment.
Yeah.
You can put 5%, 10%, you can put 7.5%, you can put whatever you want down.
Well, the one thing with the VA loan that is often overlooked is that 0% down is usually the conversation. But if you're using the VA loan a second time and they do a 5% down, then the VA fee, which is called the VA funding fee, is basically reduced in half. So it can really save a lot of money. And it's not like you're losing money because you're just taking money like that 5% from a checking and putting 5% into the home, which is equity. Basically in my mind, a different way to save money.
Okay, yeah, so we can do that as well. The next pro is that you can purchase up to a 4-unit property. So it does have to be your principal residence. You can't just buy a rental property with it. So you could live in 1 unit and then rent out, a duplex, 3-unit, 4-unit.
This is a very popular choice. I mean, we live in greater DC, so we do have multifamily homes, and we have a lot of veterans that come into this area through the PCS, and they decide that they're going to buy a multi-unit so they can get one of their colleagues, one of their other active duty military, or even a veteran to move in with them. They pay half of the rent. They live in the other side of the unit. That income helps them qualify to purchase a bigger home. So like the brownstones in DC, the quadplexes in Alexandria. It's a great way to create wealth in real estate for sure.
Yeah, so what you can do, let's say you find a 4-unit and then one of the units is vacant, but then 3 of the units are rented out for, let's just say, $1,000 per month for a total of $3,000. Sean can use part of that income to help you qualify for the loan. So maybe you're only qualified for $800K if it's a single family house. Maybe you can buy a 4-unit at 1.1 if you have this additional income coming in from different units. So that's a pretty cool, and we've done that several times. Next up, no PMI. So PMI is private mortgage insurance, and that's typically required on if you have less than 20% down, less than 20% equity, you're going to have to pay, several $100s per month extra for the private mortgage insurance.
Yeah, so if we're comparing a conventional loan or FHA loan versus VA loan, these other types, conventional FHA with lower down payments, is going to carry mortgage insurance. It could be a couple $100 a month for sure. When you're doing no down payment on the VA loan, no mortgage insurance. So it's a very nice benefit to help you with your cash flow.
Okay, so it can save you, several. I think I have I know I have PMI on an FHA loan that I have. I think I pay close to actually $400 per month. I think it's pretty significant. So definitely can save you some money. Next pro of a VA loan is the credit score flexibility. So you don't need a 750 credit score for a VA loan.
Yeah, did you know that Department of Veteran Affairs defines that there is no credit score required? It's the lender.
I know that. No.
Yeah. The lender comes in and says that you need a certain score, like a 580, a 620, a 640.
Okay.
So a lot of flexibility with the VA loan. You don't even have to have credit in some cases. We can do what they call non-traditional credit to help qualify. But a lot of flexibility in the VA. So if you hear lenders say, "Oh, our minimum is a 640," that's specific to them. That's not a VA thing.
Okay. So what's typically the lowest that you've seen, just generally speaking, with VA?
The lower credit score means that you probably have some credit things going on, so that can be a little more challenged to get qualified. But for our World War II vets, they didn't grow up with credit cards, so they pay cash and they just don't have credit. So I've done clients with 520, 540 credit scores, and we've gotten them qualified. But obviously the higher the score, it's the easier it is for the lender to qualify, but it doesn't mean that they can't qualify. So they should just check it out.
Yeah. Always do everything you can to improve your credit score, get into that 600 range if possible, but if not, VA loan is pretty flexible. Next up, another pro is you have better interest rates typically than a standard conventional, correct?
Yeah, so interest rates on a VA loan versus the conventional loan per se, you're going to see lower interest rates on that VA loan, no mortgage insurance. Now, the kind of crossover that we look at is when a client is a veteran that can qualify for a VA loan and conventional, and they're going to do 20% down. So some people just want that lower loan amount. They just like that flexibility. And in that case, as a lender, I really just need to check both options. What are the pros with the VA versus the conventional, and to kind of help them weigh it out. But the majority of time, the VA loan interest rate is by far better, especially with lower down payments, because that conventional kicks in on that extra payment for mortgage insurance.
Okay. Next pro is no prepayment penalty. That's probably true with a lot of loans, though, right? Or is that just VA?
For a lot of loans, I mean, after the financial crisis, like 2009, that kind of went away for a lot of loan types, especially the residential loans.
Okay.
But no prepayment penalty, so you can refinance it after 6 months, meaning that you're going to pay it off and get a new loan. But you can pay it off at any time.
Okay, and that actually leads me to the next pro. VA has a program like a streamlined refinance, so it's a little bit easier to, if rates drop again and you want to refinance your VA loan, there's a streamlined process for that.
Yeah. So one of the, I mentioned earlier, like conventional versus VA with big down payments. One of those pros or cons that we're going to weigh out is what's the intent for this property. If this property would become a rental property for you in the near future, the nice thing with the VA IRRRL, that stands for Interest Rate Rapid Reduction Loan. IRRRL.
Okay.
VA IRRRL is basically refinancing the VA loan, but if that property is now an investment, it can still qualify for primary interest rates, meaning like the lowest interest rate possible in the marketplace, even though it's considered a rental.
Okay.
That's not true with conventional. And so that's a really great benefit. No income, no appraisal. It's just a restructure. If you make the payments today, you can make them at a lower monthly payment.
So it's less paperwork. And just as a general rule of thumb, if you're trying to get an investment property, the rate's going to be a little bit higher because investment properties can be a little bit riskier versus a primary residence where it's going to be a little bit lower. Next up, we have VA loans are assumable. So right now, everyone's talking about assumable loans. The one thing with, I've had clients reach out and ask about them. Everyone talks about them, but they can take a little bit of time to do. It's great to have that flexibility, but you do have to be a little bit patient with assuming a loan.
Yeah.
Right. The
Department of Veteran Affairs just recently sent out a bulletin saying that servicers have to close those VA assumption loans within 45 days or less.
Oh my gosh.
Or they're not able to offer it anymore.
Wow.
So it's become a very big deal because of those timeframes were getting a little lengthy.
Yeah.
But it's really great because a veteran can go in, and if interest rates were lower on that previous mortgage and as opposed to current market, they can basically take over the loan. The downside to the assumption is the gap between what the loan amount is today and that price or purchase price that you're willing to purchase that.
Yeah.
You got to come up with the cash.
Yeah, and I've had several buyers where the seller's advertising, hey, you can get this 2.5-3.5% interest rate. You just have to bring $200,000 to the table to make up for the difference.
Just $200,000.
Yeah, but that being said, there are some properties where you might not have to bring $200,000, and I think there was one lender that was kind of providing gap funding, but that's a whole nother. It kind of got things complicated, and you're paying some really high interest rate. But every now and then you do see properties where it's not a massive gap, and it's a pretty good interest rate. And 45 days sounds a lot faster than what I've heard. So let's talk about the cons now of the VA loan. And real quick, 10 seconds. If you're looking to buy or sell in the DC area, I'm an agent. I'd love to work with you. Reach out to my team below. And then Sean's a lender. He does nationwide. And I can also put you in touch with some good nationwide real estate agents as well. So con number one, the VA funding fee. Let's talk a little bit about that.
Yeah. So any fee that you have to pay is kind of a con, right? So one of the ways that the VA stays in business is that they charge a fee called the VA funding fee. It's financed, so it's just added to the loan amount, but you don't have that mortgage insurance. Now, that VA funding fee, if you have a 10% disability, that fee is exempt for the veteran, so that it wouldn't be included.
Okay. And how roughly how much is the VA funding fee?
It varies. So when you're purchasing, like for the first time, let's just call it 2%. And then if you're buying, and that's 100% financing. Okay. And then if you're buying like your second VA loan, so you can have multiple VA loans at a time, on that second use, you could pay like 3.3%.
Okay.
But if you're going to put some down payment, then it drops to like 1.5%.
Okay.
Those aren't exact numbers. I'm just trying to help illustrate.
Yeah, and that's the thing with VA loans. Each lender is going to have like their slightly different policies. So there's going to be like a general framework for these loans, but then each lender is going to have specific things. The next con with VA loans is that it has to be your primary residence for at least a year. Now, this is a great way to start building wealth and build out your portfolio, because after a year, you can rent out. You can buy that fourplex, that duplex, 3-unit, and live in 1 unit for a year, save up some money, and then rent it out. But it can't start off as your investment property.
Yeah, your intent when you buy it is that it's primary residence. Now, we have things that happen in life, right? So your paperwork does say 12 months that you're going to occupy and live in the home. But if you get military orders and you have to leave, something comes up with the family, and you have to leave, like that's just part of life. It's just that day one, my intent is to own this home as a primary. And then you turn this home, if you vacate the home, that becomes the investment for you. And then you still can qualify for that VA IRRRL that we talked about earlier. You can still generate the revenue. The interest rate doesn't change. Like, it's a really great way to create a portfolio of homes as you kind of move from station to station.
Yeah, and if you really wanted to get all crazy with this, what you could do and really build out a portfolio in just a few years, you could do 0% VA loan, buy a 4-unit. After that, you could do like a 3.5% FHA, where you buy another 4-unit, only have to put 3.5% down. And then if you wanted to do that again, there's a 5% down multifamily option right now. So in a 3-year period, if you really wanted to, you could get like 12 units. And then, if you bought them correctly, maybe you refinance them, and then you'd have some more cash on hand to purchase a bigger property, really.
I'm glad that you brought that up, Jeff, because you're like a pro at that. You're always about helping somebody leverage their real estate and help them expand that portfolio. So I really appreciate you helping our veterans out.
Yeah, no, of course. Love working with veterans. And that brings me to the next con, which is that, so some listing agents, in this area, VA loans are so common, and people love working with veterans, but some listing agents prefer to work with conventional over VA, just because conventional loans are a little bit less strict. Some VA loans have a reputation of taking a little bit longer, correct?
Yeah, I think there's kind of a stigma around the process of a VA loan versus a conventional loan. And there's some bad actors in my business, in the lending business, that just don't know what they're doing. And there used to be a period of time, like between the 80s, the 90s, early 2000s, where we used to have to fax documents.
Yeah.
I don't even know if people know what a fax machine is.
When I got into real estate, I still remember people were faxing.
Yeah, and so we had to fax things to the Department of Veteran Affairs. That was a very lengthy process, so it kind of created this knowledge level where things take a long time. In today's market, super fast. We can pull certificate of eligibility online. We can move really quickly. And really now in today's market, working with like a professional real estate agent like Jeff or myself, the benefit is that we can really tell the seller agent that, look, we're going to move quickly. We can close VA loans in 14 days, no problems. Like we can make it happen. Yeah, and
that you did, like when I'm submitting offers for clients, I tell them, look, hey, we're a VA loan, but we can close. Yeah, I haven't done 14 days. 14 days is pretty fast, but I've done like 21, 24 days. And I remember I had this buyer, and he wanted to use this one lender that I guess his buddy used for a VA loan. And I said, look, have you looked at the reviews of this lender? Sometimes it was like a bigger, like national type of company. This lender had like 1.5-star reviews, and like all the reviews were like, this loan took forever, took 60 days, took 45 days. This is like a disservice to veterans, basically. So you really want to like work with a local lender that's like responsive, like Sean, who has 5-star reviews. So that's one thing I would definitely check, because it shocks me the amount of people that don't even check people's reviews, like online reviews, before working with an agent or lender.
Just to set the record, it's 4.9, by the way.
Yeah, okay.
Room for improvement.
Yeah, you're struggling there. The next con with VA loans is that you have to be a qualified veteran. Like I myself, I have family members that are veterans, but myself personally, I wouldn't be able to use a VA loan because I'm not a veteran. However, I could assume a VA loan, but we're talking about just basically getting a VA loan. You have to be a qualified veteran to be eligible for a VA loan.
That's right. Yeah, so we as the, one thing on your side, on the lending side, is that we really need to be pulling the certificate of eligibility. For our main branches like Army, Navy, Air Force, super easy. That COE is pretty much readily available. For like reserves, Coast Guard. Sometimes it's more challenging because of the way that they have their like retirement. We call that the DD 214. We have to pull all of those service records, compile it, and sometimes work with the Department of Veteran Affairs to pull those records out of archive. Okay. So this is why it's really good to get them to get through that pre-approval process, kind of have that conversation before searching. It'll get done, but we have to have the certificate of eligibility in order to lend on that. So
yeah. And when you're looking at properties, like you can start just by going to open houses, searching online, obviously. But when you're talking to like myself or an agent, you want to get the pre-approval, because that's just going to tell you, roughly what your monthly payment is going to be. It's going to say, okay, you're approved for $800,000, $1 million, $500,000, whatever you're approved for, and then that'll help guide you in the process. Because I've had people before where they're like, oh, we think, we want to stay under 500,000. I'm like, well, have you gotten a pre-approval yet? And they're like, no, that's what we're comfortable with. And what Zillow says, or what another just random calculator online says, is going to be a lot different than what actually talking to a lender and getting a pre-approval is going to be. And it doesn't mean you're required to purchase once you get a pre-approval. It's just going to tell you what you could afford and that kind of thing. Next up, the next con with VA loans is it is a little bit of a stricter appraisal process, but it's not crazy. Some people, you can't have like broken windows and like a massive roof leak and a flooded basement, and things like that.
So it's always, in our kind of business and in a kind of an information era where we can pull data from all over the place, we always hear kind of like pros and cons or ups and downs or challenge, more, less challenged. And I think it really depends on what we're comparing it to. So if we compare like a VA appraisal to a conventional appraisal, the conventional appraisal, they don't turn on the water, they don't flush the toilets, they don't make sure the HVAC works. Like the VA loan, they're walking around just making sure, like, does the water turn on? Does the HVAC turn on? And one thing that I think a lot of loan officers don't know, and maybe even underwriters for that matter, is that the Department of Veteran Affairs has a process that if there are issues with the home that you as the veteran are okay with, you could write a letter and say, hey, I'm aware that there's no handrail going down to the basement, these 3 steps. That's fine for me, like I'm able. You can then have that condition waived. And I think there's a lot of misalignment with that in the community. The VA stance is let's take care of the veteran, health and safety issues should be addressed, like broken glass, wobbly steps, that's important. But things that are kind of like, maybe it's code now, but wasn't code before, we can work through those.
Yeah, that's interesting. I had a VA buyer and they didn't have a handrail in the basement. And we knew that the VA loan would require that. So before closing, actually before we got the appraisal done, the seller was okay with us installing a handrail.
Yeah. Well, that's the best way to make a smooth process for sure.
Yeah, and I think one time also I don't know if this is still a requirement, but they were missing like a refrigerator or they were missing some type of appliance. And because we were getting such a good deal, we just paid for the appliance to be installed. Then the appraiser went out and then it was okay.
Yeah, that could be an example too where, if your loan officer said, hey, Jeff, have your veteran write a letter and just say, hey, cool, I'm going to get a refrigerator after closing. And then we submit the letter, then boom, it's not an issue anymore.
Okay.
That turnaround process, maybe like 24, 36 hours. So it's not like a lengthy process.
And that's why it's good to work with like a responsive lender, because sometimes like some of these credit unions and like massive banks, it's tougher to get in contact and get responses from people. So when we're purchasing, I like to have like every advantage possible going in your favor. The next con with VA loans is, if you're doing 0% down, right, you're not buying a property with a ton of equity. Theoretically it would just be, you're just buying it at market. Sometimes you get a really good deal and the appraisal comes in a lot higher than what you're purchasing it for. But, if you have to sell like 6 months later, it might be a little bit tougher. But, you should be buying a property, you shouldn't be the VA, the way the appraisal works anyways, you're not going to be overpaying for a property.
Yeah, so I think this is a kind of an interesting point that you bring up because, a downside is that you don't really have equity. On the flip side, you were able to buy a home without having to save a lot of equity. And if you're going to live in this home for a couple of years, like especially in our marketplace, like the DMV, home prices are like appreciating, like average is like a 5%. So if you bought a $500,000 home today and no down payment, by year 1, it's $525. By year 2, it's $550. So downside is you don't have equity, but you didn't have to save up. You could leverage the real estate portfolio and build wealth in a couple of years.
Yeah, and you have more. Some people prefer to have more cash on hand.
Yeah,
which is good too.
I think the challenge there too is that if your intent was only to buy a home for 12 months, I mean, I probably wouldn't recommend you to buy.
Yeah, that's not a good idea if it's just 12 months.
Yeah, because you got like move in, transaction. I don't know. It takes me like 12 months to unpack boxes when I'm
Yeah. So if you're looking to buy or sell in the Washington, D.C. area, reach out to us below. Our contact information is there. Or if you're looking nationwide, we can also put you in touch with some great people. So thanks for watching, and we'll see you on the next one.